In this presentation, we will take a look at the manufacturing activities flow. We'll take a look at the costs of the manufacturing process and how they flow through the manufacturing process, how we will track and organize these costs as we go. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Remember that the major difference between the cost of goods sold calculation for a merchandiser, a company that purchases and sells inventory, and a manufacturer, one that makes the inventory, is going to be that a merchandiser has these purchases item where they're just going to purchase the inventory, and the manufacturer is going to have the cost of goods manufactured. So this number then becomes the number that we need to determine. How are we going to get to this number? If we talk about a merchandiser, it's very easy for us to know what the purchases are because that's what we purchase. That's pretty straightforward. For the manufacturer, however, the cost of the goods we manufacture is going to include more than just what we purchase, more than just raw material. It's going to include the things such as direct labor and overhead. So we'll take a look at this in three broad categories where we'll have the materials, we'll have the production, and then we'll eventually be selling the materials we're making. Remember that the end process here is, of course, the production of inventory, the ultimate goal to be selling it. So most of this that we're thinking about is all kind of balance sheet stuff until we get to the end when we sell it, which is going to be similar to a merchandising company, where once we're at the end, we sell it, moving it from the balance sheet to the income statement in the form of cost of goods sold. So first we have the materials that we think of, and the materials we can think of will run through a similar process as when we just buy and sell inventory from a merchandising company, meaning we're going to have the materials that's already in the warehouse. The materials that we have from last month are still there this month. We're going to include to those materials what we purchase, so we're going to add purchases to those materials, and then we're going to subtract from them ending materials, what is still there. We're going to count the materials, those will be the ending materials, and that will give us the materials used. Now, this calculation should look pretty similar to our cost of goods sold. You want to be able to understand this calculation because it's the same kind of thing for cost of goods sold for a merchandising company and similar to the cost of goods sold for a manufacturer as well. Note we have the beginning inventory, materials. We could have a subcategory if we wanted to, say materials available for use, and then we're going to subtract out the ending materials to give us the materials used. So this is going to be our purchasing, and you can think of this just as us, purchasing the materials that we have and going through this process to determine the materials that we're going to use within production. Now, once that happens, we're going to say, okay, that's going to go to our production area here. This number here is going to be part of production. This is what we used to produce. But it's not the only thing that we had in production, because in production, we also had the beginning work in process. When we think about production, we're thinking about what's in process. Work in process, WIP, WIP, is often used here. So we're going to say, well, we already had some stuff that was in work in process. Now, in this month, according to this calculation, we included more materials here based on this calculation to the work in process. And so we're going to add that in. But we're also going to add direct labor and the overhead. And these are the two areas that are often overlooked within the production process, because when we think of goods and services, we often think of just the stuff it's made out of. It's made out of plastic. The guitar is made out of wood. But of course, the major components that comprise the cost of it are labor and overhead. So we have to include that in the production process. And these two items are the confusing things to most people because they're going to differ when we record them here as to when we had a service company or a company that just buys and sells inventory. Because some things like utilities on the warehouse, some things like depreciation, we're not going to expense them as we had in the past. We're going to include them in the cost of production. We're going to include them in the cost of inventory. And then we're going to subtract out the ending work in process, what's still there, what's not completed yet. So we're going to count what's still in the ending work in process and not yet done. And that'll give us the cost of goods manufactured. So again, these two calculations, you can see of them as similar. They're similar in nature, meaning we had beginning work in process and then not purchases, but the materials used and all the labor. These three items being what we added to it, what we made from it. We didn't buy it, we made it. We transferred over this, and then we added the labor and the overhead. Those are all costs that we put into it. We could have then we could then have a subcategory if we chose to, which would be work in process available, and then subtract out the ending work in process. So it's similar formulas that we have here. This time our bottom line number getting to cost of goods manufactured, not to be confused with cost of goods sold. Cost of goods manufactured is what we made during this time period. Cost of goods sold is going to be what we actually sold during this time period. Cost of goods manufactured will be used in the calculation for cost of goods sold, however, which would be the beginning inventory. Beginning the finished goods inventory. So now we're looking at the goods that are done now, the finished goods inventory, and then we're going to add to it the cost of goods manufactured. Instead of, as we would for a merchandiser, a company that just purchases and sells inventory, where this would be purchases. So this is the differing number here between those two. That's going to give us the goods available for sale, just a subcategory. This is what we could have sold during the time period. This is our calculation of cost of goods sold that we saw prior. And then that's going to give us our ending finished good. And then we're going to subtract from that our ending finished goods inventory, which we could get from a physical count to finally get the cost of goods sold. Now notice we have the sales item here. The only area here that's going to be on the income statement is the cost of goods sold. And it's not the sales item. We don't know what we sold it for, or we would, but this flow doesn't track the sales price. The sales price has nothing to do directly with the cost of the goods sold. We might use the cost to derive the sales price, but this, remember, we're tracking the cost. So when we sell something, if it's a perpetual system, we're gonna debit cash or debit accounts receivable, credit sales revenue. Sales will be recorded. That's the part that's not here. We're also going to debit cost of goods sold, the expense, and reduce inventory, and credit inventory. And that's what we are tracking here. This is going to be the cost of goods sold, the expense portion of the sales we make. When we make a sale, we have the related expense of cost of goods sold. Note that this expense, this one time that we're finally hitting the income statement, is comprised of all this activity that we've done. The direct materials are included in it. The direct labor is included in it. The overhead is included in it. All that stuff that we've been tracking this whole time and haven't been putting on the income statement at all. We've just been putting it on the balance sheet as just lumping it in together as part of inventory, is finally being expensed all together as we sell it in the form of cost of goods sold. For more accounting information and accounting courses, visit our website at accountinginstruction.info.